CEO of the NPRA, the National Pensions Regulatory Authority, Mr. Chris Boedi Mensah. He'll be joining us shortly. Together with our partners, members of the press, ladies and gentlemen, we say accept the warm and generous recognition of Old Mutual Ghana. To welcome us and to spell out how today will pan out is our Executive Marketing and Customer Experience. One.
Thank you, Jerry. So on behalf of our group CEO, our board, exec from the Old Mutual Group, I would like to welcome you all to this morning's event. We sincerely apologize for the late start, but I promise you it will be worth your while. So welcome once again as we take a unique look into the financial behaviors of Ghanaians. For those of you who were not with us the last time, our Financial Services Monitor is one of the flagship products we have at Old Mutual, and is actually a longitudinal study that provides comprehensive insights into the Ghanaian financial landscape. This is an annual study for us. The first one was conducted in 2023, and this particular study that we are going to look at today was conducted in 2024. But you would ask yourself, why do we have to do this study year on year? And really, what's the purpose of doing this study every year? For us at Old Mutual, we believe that the central premise behind the Financial Services Monitor is if you know better, you can do better. The perception out there is that Old Mutual is an insurance business. But this morning, I just want to let you know that we are more than an insurance business. We are an integrated financial services business with well-developed insurance, asset management, and in some of our other markets, banking services that are available to our customers. With this in mind, we want to be able to help our customers achieve their lifetime financial goals and overcome the challenges they face, really within, in terms of managing their financial well-being. This is directly linked to the sustainability of our business. Financial insecurity has a way of impacting physical and mental well-being. And so our approach is to work with our customers to improve their overall well-being over time. We see this study as valuable resource for individuals, businesses, and policymakers alike. So today, one of the key partners we have here is our media, because we believe that we can work with our media to make sure that we carry our message across to the relevant stakeholders. Our study is really aimed at empowering Ghanaians to make informed decisions and in turn boost financial and holistic wellness across the nation. This morning, I want to encourage you to be with us here and be present, to listen carefully, to participate in a dialogue that we are going to have this morning, and please keep an open mind. See this as a research that has been undertaken, that has insights that we are all going to work together to make sure that we improve the financial well-being of the everyday Ghanaian. So once again, I want to say welcome to everyone. Thank you so much for joining us, and enjoy the rest of the program. Thank you.
Madam Rita Boateng is our Executive for Marketing and Customer Experience, welcoming us warmly and stating categorically our purpose for gathering. If you're joining us on Channel 1 TV or on our Facebook platform, we welcome you to this breakfast meeting and to the launch of the Old Mutual Financial Services Monitor. As you've already heard, today we want to give you a bird's eye view of the financial behaviors, attitudes, and challenges faced by Ghanaian consumers under the year 2024, and most of all, leave you with our assurance of our commitments to driving positive financial behaviors, thereby helping all our Ghanaian consumers achieve their lifetime financial goals. As you might be aware already, the past few years have been one of economic activity slowing down, productivity being low, cost of living rising through the roof, but above all, high interest rates leading to high cost of credit. Our government who haven't tried at all. They have also been on the expenditure tangent without really reducing, well, they've been on the borrowing tangent without reducing expenditure. What we want to do now is to have a complete overview of the economic landscape of Ghana. And who better to do it for us than an economist, a senior lecturer at the University of Ghana Business School. Make welcome Professor Patrick Opoku Asuming. He has done nothing wrong. Please welcome him all.
Good morning. It's a pleasure to be here. So my task this morning is to just provide the overall economic context that will explain the results from the Financial Services Monitor. So I'm going to start by giving some broad overview about the structure of the economy, and then I will talk about how the economy has been in the last 5 years or so. The thing in Ghana is that any period that you choose to do your analysis from, you're going to get into trouble. So you just choose what works. So next slide, please. Okay, so the first thing I want to do is to give you some sense of the structure of the economy. And I'm going to think about it in several angles. There are several ways of presenting the structure of the economy. One is when we count the GDP, to look at it from production side. So under that, you're able to tell the economy or production coming from services, agric, and industry. And so at present, the top orange line you see is the services sector. The services sector has been the biggest sector of the Ghanaian economy for a while now. And, you know, the ratios seem to be fluctuating some from time to time, but essentially you can clearly see it's always been about 45% of the economy. What the next one that you can see is industry, which is about a third of the economy, and now agric is the lowest. So, okay, so, right. So the next thing I wanted to show you is how the economy passed out by dividing them between formal and informal sector. In the last couple of weeks, there's been a lot of discussion about productivity and then the formal sector and the informal sector. So, okay, so in general, in terms of contribution to output and GDP, the informal sector currently accounts for about a quarter of the economy, and yet it makes, in terms of employment, contribution to employment, it accounts for over 80%. So there are two potential explanations. One is that because it's informal, the information from there is very difficult to capture. So perhaps we are under capturing their contribution. Or another potential explanation is that they are just not very productive, because if 80% employment is accounting for only a quarter of output, it tells you that perhaps the productivity there is quite low. Now, a different way of looking at the economy is to divide it by expenditure. So when output is produced, it has to be purchased. There are four main group of economic agents that purchase our output. So there's household consumption, then there's gross business fixed investment, then there's government expenditures, and then there's net exports. So if you decide to pass up the economy that way, you realize that household consumption is currently about 90% of the output that is produced. So it means that whatever we produce, about 90% is purchased by households. Now that's an increase from about 70% in the year 2018. Now the next biggest category is actually gross capital formation. This is what businesses use to commit to expand their production activities. And that is usually around 25%. In the last couple of years, if the graph was showing, you realize that we've seen a clear dip in recent times. So especially by 2023, the investment by businesses has gone down about 10 percentage points. So the blue line you see at the top is the portion that goes to consumption, and then unfortunately the other parts are not visible yet. So now let me talk about the economy since 2020, how the economy has been performing. 2022 to 2023 saw a sharp decline in the performance of the economy. So in 2024, we've seen some rebound. So in particular, I'll show you a graph that shows that will show that the economy was doing okay, especially in the year after the COVID. The economy rebounded strongly. And then in 2022 and 2023, everything came crashing down. But last year, we've seen some rebound. I'm sure you might have heard that being a point of discussion in the budget presentation yesterday. But the rebound has been led by the mining and quarrying sector. So we count mining and quarrying under industry. So you see that the graph will say industry is picking up. But that's primarily because that's where we count our oil output, and that's where we count our mining output. The other sectors haven't done so great. Even in the 2024, the economy performed better than expected. And in particular, if you decide to break it down by quarters, you realize that in the first 3 quarters, mining and quarrying did very well. And at that period, we saw overall growth improving. In the last quarter, growth declined, and that's because the mining and quarrying sector completely declined. Now, so the reason why this matters is that this is where, when the economy is growing, we are generating incomes. One side of saying the economy is growing is that we are generating incomes, and a different side is to look at how those incomes are being spent. Then the other element has been the cost of living. The cost of living has been rising since the start of 2022. By the end of 2022, the inflation rate had reached its 30-year peak of about 54%. Since then, it's been declining. At the end of February, the inflation rate had come down to about 23.1%. But I think it's important to understand that inflation declining doesn't mean that things are getting cheaper. Indeed, in the period that inflation has been declining, from the start of 2023, the cost of living has risen 54%. And that is primarily driven by cost of food. So food inflation has remained stubbornly high. And that is a critical factor because if you look at the population of Ghana, majority of the people spend a higher fraction of their income on food. And food, for the overall economy, food makes up about 43% of our expenditure. So when food cost is rising, you can begin to see that it's going to bite. So the cost of food since the start of January 2023 has risen 66%. for our purposes, I'm also reporting the growth rate of the informal sector. So the green line is the growth rate of the total GDP. The blue line is the growth rate of the informal sector, and the orange one is the growth rate without oil. So one of the things you see is that the oil sectors, or the GDP without oil, lines closely with the GDP, with the growth rate of the informal sector. So you can see that the blue line and the green line, they seem to move together. If you can see from the graph, whenever they are trending up, they will both trend up. That tells us that the informal sector, that is the growth without oil. So the informal sector growth seem to be doing different things. And then if you want to see the growth rate also by sector, you see, like I mentioned, towards the end of the graph, you see that the orange line has moved up. That is industry. And like I said, that's where we count our oil and mining output. So you've seen that, especially for so you can't see the axis, but from the bottom there, the moment you see that sharp peak, that is the start of 2024. And you realize that for most of 2024, industry grew much stronger. But in the last quarter, the growth collapsed. That's because the thing with oil is that when you bring new oil streams, you can't bring new oil stream every period. So after a while, its overall impact on growth will kind of go down. So it's been part of the discussion that has been going on since the budget. I think coming in, I heard Bernard engaging the current deputy finance minister and the former on the issue about the growth rate. Oh, great. The issue about the growth rate. And the point is that the current government is projecting that 2025 will grow at 4%, which is lower than what you grew in 2024. Now, the explanation is that the oil-driven growth is going to tail off. It's going to come down already. And we saw that in the last quarter. So the last part you see where the red line comes down is the last quarter. The growth rate slows down. Not that output is negative, because it's still above the zero line, but the growth rate came down. Then, so in terms of growth by expenditure, I said that we can divide the economy up into different kinds of expenditures. So here I'm showing you household consumption expenditures, and then expenditures by government, and then capital formation, gross capital formation. This is really what businesses do. So you can clearly see that the household consumption did slightly better in 2023. So you've seen that the growth rate of household consumption has done better, but rather worryingly, you see that gross capital formation has completely taken a nosedive. That is the line you see getting down there, especially in the year 2023. So it's a reflection of the difficulties that the economy had gone through. So later on, I'll show you how the cost of credit has gone up, and of the overall effect of the DDEP and other development that the economy has seen in the last couple of years. You saw that gross capital formation really suffered. So here is where I show you the inflation. So I'm showing you food inflation is the one on top, and then the blue one is the combined, and then the green one is non-food inflation. So you can clearly see that we reached a peak around the end of 2022. Since then, the inflation rate has been coming down a little bit, but you can see clearly that it kind of flattens out and then start bumping up a little bit towards the end of 2024 into 2025. And almost throughout the entire period, you realize that food inflation has stayed up. Like I said, even the period where inflation is falling doesn't mean that cost of living is falling. It's just that the rate of increase is moderating a little bit. So The other thing is that interest rate has started falling. Cost of credit has started falling. Now, but it doesn't mean that businesses and households are borrowing at lower cost. Not just yet. That's because we have a mechanism for interest rate pricing. Currently, the rates that have fallen dramatically is the government treasury bill rate. As you know, once we did the DDEP, the bond market closed. So government essentially has been relying on the short-term market, which is the treasury bills. The way interest rates are priced in Ghana now is that we have a base rate formula called the Ghana reference rate, which is computed using 3 market rates: the 91-day treasury bill rate, the monetary policy rate, and the interbank lending rate. So currently, the 91-day treasury bill, it has a weight of about 40%. So it means that now that we've seen it declining, we expect that over time, the overall cost of credit for businesses will start declining. But it only happens after a lag because it's computed on month-on-month basis. So we've seen in particular, since the start of February, we've seen a more dramatic decline in the treasury bill rate. So it's expected that over time, that will filter into reducing the cost of credit. The CD has seen some relative stability, and I put relative in capital letters, because compared to the worst of the worst, which was like 2022, we've seen that the rate of depreciation has kind of moderated a little bit. But you know, the uncertainty about the movement of the currency still remains. So this is a graph showing you different kinds of rates. We have the monetary policy rate, the reference rate that I spoke about. We have the interbank rate, and we have the treasury bill rate. So you can clearly see since 2024, since the start of 2024, most of them have been trending down. So if you look at the tail end of almost all the graphs, you see that there's a decline. So the rates are falling, and they're expected to fall. They are falling, but note that they're still very high, because we went way high. You see almost all of them reached a very high peak. So even though they are falling, they haven't fallen to the level that you can say is comparable to even any of our peers. This is how the CD has performed. There are many ways of looking at the CD's performance. This is one of my preferred ways. Now, you can look at this graph in 2 ways. One is that to take a short-term view and say, well, since 2024, at least the CD has done a little better. So note that this is CD buying dollar, or the amount of dollars, amount of CDs $1 buy. So it means if it's going up, it's a bad thing. It means the CD is losing value. If it's coming down, then it's good. And you can see since the third quarter of 2024, you've seen some coming down. However, if you take the long-term view, and you look at where we were even in 2020, and then where we have gone, then you begin to see that perhaps if you take it over the longer-term view, the CD is not doing well. Indeed, if you look at when we redenominated the currency, in the first 15 years that we redenominated currency, the total losses that the CD incurred is less than the losses the CD has incurred since 2022. So in 3 years, the CD has lost more of its value than all the years since we did the redenomination combined. But of course, we are beginning to see some level of stability. You usually have to take it over a longer period, or we want to see the stability for a longer period before we begin to see that things have improved on that side. I'm almost done. So, now, since the elections in December, I think generally sentiments have been generally very positive. The period where the survey that you see the results was conducted, I believe, was August 2024. This was when we were approaching the election. So I think you have to put that in context. Since the election, sentiments have generally improved. We are currently under an IMF program that has brought different forms of hardships. Utility tariffs have gone up. New taxes came up. And then thankfully yesterday we heard that a lot of them are going to be removed. And then we did a domestic debt exchange. Now, the debt exchange in general. The domestic debt exchange is one of the biggest things that has happened to the financial sector in recent years, both in terms of what it did to the banking sector, which itself was reeling from a cleanup. And now we added on that. But also what it has done to the middle class. So, it's wiped out a lot of people's savings, and then also shook the confidence in the overall financial system. So the other thing is that it also limited investment options for people. Now, the budget that was read yesterday, well, there's a lot to digest. I only make 2 points. Two things that I learned. One is there's an attempt to shift the direction of fiscal policy. So there's a shift from, the overbearing and then heavy government to an attempt to try and devolve back to the private sector. That's one of the things that I saw. So you see this in the rolling back of taxes, as well as the plan to, decentralize some element of government spending. Because in the previous regime, there was an attempt to do what we call capping, earmark capping. That meant that funds that statutorily were supposed to go to specific sectors, the government decided that no, they will appropriate it and they reallocate it. Now, clearly, the government is not the most efficient spender. So I think, for me, the fact that there's a shift in policy away from that is something very positive. Then, so those are the two things. So I expect that, with the full passage of the budget, perhaps the removal of the taxes and the fact that there's more spending being moved to the private sector, overall, things should continue to improve. Now, the macroeconomic environment, it has improved from the worst part in 2022, but it has not gone back to the pre-COVID period. So let's get it clear. And that's going to take a little bit of time. The sense is that there's more belt tightening in yesterday's budget than the previous one. The government is shrinking its expenditure and is, even though it's changing the way the spending is done by moving more to the private sector, there's overall reduction. And government is the biggest spender in the economy. Government is the biggest purchaser. So when it decides to reduce overall spending, that it's going to have some effect. And there's a sense that, the budget the version that we saw doesn't communicate the full program of government for the year. By the time it's done, we expect that growth will slow down. The currency will improve only in the medium term, because the longer term things that drive the volatility of the currency takes time to address, and we have to wait for them to be implemented. But I think the interest rate is the one that we are seeing almost immediate impact. What that will do to lending is also unclear, because of the difficulty the economy has gone through. The financial institutions have been very careful, because non-performing loans have been rising. If you're a bank and people take loans and they are not paying, you have to be careful. So I think that caution will still be. I think the banks will respond only cautiously. They need to see the economy improve to the extent that their clients are more able to pay their loans before we see lending pick up more substantially. So that's my last substantive point. What I'll leave you with is real incomes have declined. Inflation has outpaced wages. So in fact, even 2025, the government agreed a 10% wage increment with organized labor. The projected inflation for the year, by the end of the year, is 11.9. So it means that even this year, on average, real incomes will decline. But, I think that the good thing is that there's some positivity happening, both from the election and also some of the things that the new government has been saying and what we saw in the budget. I think that positivity is very important, because that influences investment decision-making and people's outlook. I've already spoken about what the domestic debt exchange did to the financial sector. So thank you very much. I'll end my presentation here. Thankfully, I don't have to answer difficult questions.
Thank you. Many thanks to you, Professor Patrick Opoku Asuming, You are an economist and a senior lecturer at the University of Ghana Business School. Ladies and gentlemen, please, a round of applause. Thank you for painting that rich picture of Ghana's macroeconomy, one of growth, some reversals, some gains, some growth, at the same time, two prospects and great opportunities that lie ahead. Somebody sent me a message. It says, when is the minister speaking? I beg you in all the names of God. You are welcome to the Old Mutual Financial Services Monitor, the launch of it. It's our breakfast meeting where we give you a bird's eye view of financial behaviors, attitudes, and challenges faced by Ghanaian consumers under the 2024 economic climate, but most importantly, where we get to assure you of our commitment to driving positive financial behaviors and thereby helping our Ghanaian consumers achieve their lifetime financial goals. So if you're joining us on Channel One TV or on our Facebook platform, this is our agenda. Last year, a scene was painted to us. It was a tale of tensions where they told us that Ghana is the most financially stressed society, with income security being the main concern. How many of us agree with this assertion? How many of us are financially stressed? Incomes are on the decline. So please, show by hand, how many of us are financially stressed? Somebody called me a few days ago. They wanted to talk to me about mental health. And I told them I have only one mental health condition. It shows up when I'm broke. But today we want to have a full appreciation of the Old Mutual Financial Services Monitor, the findings in the presentation. Who better to do it for us than our very own global group head, I beg your pardon, of Old Mutual Limited, in charge of knowledge and insights. Make welcome Madam Vuyokazi Mabude.
Thank you. While we just sort out the technical glitch, and thank you, our MC is double hatting today. I just want to point out, in the people in the room, just put up your hands again if you're financially stressed. Okay, that's accurate, actually. That's very, very accurate. 60% of Ghanaians are still saying they're financially stressed. So it's about that. I'm ruling out Arno and a few of the South Africans who don't qualify as Ghanaians in the sample. But I do want to just verify that that number just got proven correct. Just as the screen comes up, what we wanted to share today is the highlights of this survey. And as it's been spoke, you can actually leave it down. That's fine. Thank you. Yep. Thank you so much. As has already been shared, it is something that Old Mutual is committed to, not just for the sake of the results and we kind of sit and look at them, but we actually want to make sure that this is the kind of thing that gets into the hands of our consumers, our business partners, and our teams internally when they design products and think about solutions that meet customer needs. And so in doing this, what we have purposefully chosen to do for this survey is to sample a cohort of people who represent about 60% of the adult population of Ghana. They are economically active. They are based in urban and peri-urban areas. We do the research with a local-based partner, so it is very robust. And we have a very high level of confidence in the results that we get. So when I talk about a 95% confidence level, that means we could redo the test 100 times and you'd get exactly the same results 95 of those times. The income levels, again, start from 1,000 Ghana cedis all the way up to as high as we can source from people. As mentioned, the survey was done towards the back end of last year, so just before the elections, and those are the results that we'll be sharing today. What have we seen this year? And the biggest thing, I think, is tough times are still the reality for people. That is no surprise. 60% of this room put their hands up when we talked about financial stress. Ghanaians remain considerably financially stressed. We do this survey across multiple countries, across the region, and Ghanaians still come out on top when we look at financial stress across multiple markets. They are less financially satisfied than they were the last time we did this survey. And one of the newest things to emerge really is around interconnectedness. So what Ghanaians have done in these tough times is to turn to their network. They've turned to family, friends, trusted sources. Those are the people who they're going to for support, for business income, when they're looking at trying to get investment for their business, when they're looking for loans, borrowing behavior. All of that is now happening in circles of trust, and people have started to depend on each other even more. We have the local term for that, Biakoye, really talking about this interconnectedness and the power of that. And I think what you see here today is the combination of what could be possible if that is harnessed, and also what could be possible if it is not well managed and it becomes something where there's a debt spiral and things like that that start to emerge. There is a clear focus on savings preservation. The mindset around saving is definitely entrenched from a Ghanaian perspective. We're starting to see a dip in people actually tapping into savings. Some of that is because their savings are eroded, given the tough times, but some of it is because they're actually actively not tapping into their savings. There is a portion, obviously, of people who are borrowing more, therefore not tapping into their savings either. But overall, we do definitely see a savings mindset becoming more and more entrenched in the Ghanaian consumer's mind. And finally, something that remains true, irrespective of the tough times that they are in, is that the optimism is still significantly higher than what we see in other countries. So 80% of Ghanaians still very positive that things will improve, that their businesses will grow, that their children will get good educations, and that things will definitely improve, not just for them, but for the country as well. And so let's just jump into those financial behavior indicators. We're going to start out with people's sentiment regarding the economy. So you can see at the top, when we look at confidence, still very, very low. So less than 1 in 4 consumers are confident in the country's economy. So 22%, slightly edged up from 17% in the 2023 read, but still very, very low. That is not dampened the optimism as yet when we look at the results. So 61% of people still believe that things will improve over the next 12 months from an economy perspective. So the reality, definitely they're experiencing that, and that's what has affected their confidence, but they are still optimistic about what will happen with the economy for the country. Their personal outlook, that optimism is even more magnified. So 80% of people saying, in the next 6 months, things will improve for me when I look at my finances. And this is driven by 3 things. 1, what they're doing from an investment perspective in their businesses, growing their businesses or expanding them. 2, saving and investing more than they are today. And 3, getting a better job or earning more income through various opportunities. So people's optimism is really based on those three reasons across the board. We've spoken a lot about financial stress today. Again, just to underscore this, these levels, 60%, so almost 2/3 of the country's adult working population, significantly stressed and frequently thinking about their incomes. And you'll see a couple of statistics around income security and job security coming through. Although there's been a slight decline, which I think is a good thing to see, overall still very much a high financial stress environment. Financial satisfaction declined slightly as well. Again, this is, and Prof has spoken to the factors regarding this, the decrease in income, high cost of living, 69% of people saying that they don't actually earn any more than they did in the previous wave of this research. And so that satisfaction is starting to decline, and we're hoping that it's a trend that's not going to be consistent, but it does actually indicate and highlight the anxiety that people have when it comes to their finances. When we look at their financial priorities, unsurprisingly, first and foremost is income protection or income security. 46% of people are saying that they are constantly worried about losing their income. It is not just, once every now and then I think about it. It's a constant worry for them, and that number is up from 40%. I've spoken about the erosion on earnings and how that's affecting people's spending power. So this is not surprising that people are very, very concerned when it comes to their income and whether or not they can actually guarantee an income every single month. Where are they going to get additional sources of income? The first place they're going, as I mentioned, is their trusted network, family and friends. 38% of working Ghanaians depend on income from family and friends, whether locally or abroad. Some of that comes from spouses, etc., people abroad, but that number is significantly higher than what we've seen in the previous waves. In fact, we didn't even report on this number because it was that low versus where we are now, where 38% of people month to month have to actually receive some income from family and friends. They are polyjobbing. This is a term that talks about side hustles. It is people freelancing, doing additional work to their main source of income. This is still prevalent. It increases with income. So the more people earn, the more likely they are to be a polyjobber because of skills. And so 1 in 5 has more than one income stream. So people are not resting on their laurels. They are going out there, finding opportunities and creating opportunities for themselves in the form of multiple sources of income. And they're depending on their businesses. So 49% of people, half of Ghanaians who are working, also have a business that they are running. A lot of these businesses are single person businesses, but nonetheless very much still entrenched in how people manage their money, is running a business, whether alongside a job or as the only source of income that they have. This is super important. When we look at funding for those businesses, again, you're seeing the same patterns that we saw emerging from an income perspective. People are turning to their circles of trust before they're going to formal lenders to fund their businesses. So they will go to their susu, they'll go to their friends and family before they go to a bank or a lender that they could use. So only 1 in 10 entrepreneurs are currently using lenders to fund their businesses. Second priority, and this particular point, just before I move on, is completely unique to Ghana. So people supporting each other is not unique to Ghana. It being a priority is unique to Ghana. So the Bank of Family and Friends is very much open and very much operational across the continent. But only in Ghana do people actually say, my second biggest priority is financially assisting other people. We do not see that in any other country that we do this survey. And so this, again, it's risen from the 5th priority the last time we did the study to the second most important thing in 2024. So you start to see, again, that sense of wanting to uplift or support other people is a huge part of people's financial realities today. Now, what that does is when we start to look at financial dependency, and the term that we've coined for it is the sandwich generation, which I believe many people in this room will be a part of, is having adult and child dependence. So whether that is parents that you are taking care of and your children, these are people, and the way that you should think about it is almost like a rubber band or an elastic. These are people who are stretched in every direction. And today, although that number has dropped slightly, 38% of Ghanaians sit in that sandwich generation. When you start to think about products, you think about solutions that these people need, what are the things that are relevant for someone who's navigating complexity, like having parents, adults, adult children, maybe even as dependents, and younger dependents as well. So this has absolutely become a reality for people. And when you combine that with people's importance, on the importance that they place on supporting others, this becomes absolutely critical to solve for and to figure out, how do we support people? How do we help people navigate this challenge? The third one is getting the best investment returns. So here we're going to zoom into savings behavior. So you can see from a priority level, quite important to make sure that people are getting returns on what they're investing in and their savings. So saving is important to Ghanaians. And one of the questions we asked people was, in the last 6 months, what new things have you tried when you're handling your money? And 3 of the things that came up were: 1, I started a new business or I invested in a new business. 2, I'm saving more than I used to, or I'm saving in the bank, so using a new vehicle or saving channel. And lastly, saving within using a susu box or different type of susu. 25% of household income goes towards saving. Again, if you play back the importance of entrepreneurship, people are using their savings to fund their businesses, they're using their savings for their children's education, to buy a home, etc. It becomes super, super critical for Ghanaians to have savings. And they are trying new ways of saving, so that mindset for us and the behaviors that are starting to emerge, really, really encouraging. Formal banked savings has gone up by 10%. So people saying, I'm actually using banks to save, that has gone up by 10%, which is fantastic to see. Informal savings remain solid and stable. So 37% of people belonging to a SUSU, 28% of people keeping unbanked cash. So that is money that you put under the mattress so that when a family member, or a friend asks for support, you're able to tap into it. So that convenience and the safety, and it's in inverted commas because safety of keeping money is for any emergencies or things that can show up. So people are trying to save. The thing that I think is important here is the nature of those savings. They tend to be very short-term focused for the bulk of the priorities that people are saving for. It is emergencies, it's things that are unexpected. And so whatever they're saving, they're turning around and using a little bit later, turning around and using a bit more as time goes on. What we have seen though, which, and again, I think I spoke to this earlier, is encouraging, is that people are less likely to dip into their savings now than they were in the 2023 read. And there are two reasons that we believe this is happening. The first is because they are borrowing more. That is the reality, is that they're not dipping into their savings because they are borrowing more. The second is because they are receiving support from family and friends, they are able to actually hang on to some of those savings that they have. Even if it's a little bit less than they used to have, people are actually leaning on their network more and therefore able to actually hold on to the savings that they need for their business or their children's education. And so this definitely encouraging, but we will be spending a little bit more time to understand exactly what's happening underneath this particular statistic, but very positive to see the savings mindset and behavior starting to shift in the right direction from a Ghanaian perspective. When we look at retirement is still very low in the priority list. So it comes up 8th out of 10 top 10 priorities. And you can see at the top what I mentioned about tending to be very short term in nature, outside of education. Everything else is kind of an emergency, a medical expense, or saving for something to do with your family. So retirement does fall at the bottom of that list today. And unsurprisingly, only a third of people are actively saving for their retirement. Even amongst older people, 6 in 10 older consumers saying they haven't actually started actively putting away money. Play back that number of people who are in the sandwich generation. These are the parents, family members, etc., that are now not saving for retirement and putting, the younger people under pressure to have to support older and younger dependents. When it comes to their confidence in the adequacy of their retirement savings, this has actually dropped from 18% to 9%. So I do think there is an awareness to the fact that what they are saving, if they are saving at all for retirement, is not enough. But the gap is in behavior. So I think the awareness and the knowledge around retirement definitely is starting to land, because people are becoming more aware that I don't actually have enough for my retirement, but the behavior in terms of actually being able to save and starting to save has not yet emerged from a retirement perspective. Finally, we talk about paying off debt. We've talked a lot today about borrowing. And you can see here the green lines are all from the 2024 report. Every form of borrowing has gone up, as you can see. Loans from families and friends, loans from a financial institution, micro lenders, mobile money loans have doubled since the last read. So across the board, you are starting to see that emergence of borrowing behavior becoming commonplace for people managing their expenses. What is concerning is that when we look at the priority level, so paying debt is the 4th level priority for people when it comes to their finances. But when you look at and you follow the trail of their money, only 6% of household income is allocated to paying and servicing debt. So while people are very aware that they are in a debt cycle or debt spiral in certain cases, it's not paying. And I see people nodding their heads. And, even last night we had a conversation with some of our colleagues from the team and asking people, but would you pay back a family member? And everyone was like, but no. And the South Africans in the room were shocked. But it really was a case of that level of understanding that debt has to be serviced. Whether or not there is, family and friend loans that, you write off, The reality is that the more people start to borrow, the more they need to have debt management behaviors in place. Otherwise, we will start to see things emerge that become very problematic to their financial well-being. They are also very stressed about debt. So even though they're not paying it, 55% of people are worried about how much debt they have. And so that cycle of financial stress that we saw earlier, 60% of people really, really highly stressed, the more debt, the more borrowing behavior occurs, the more this will actually start to spiral. So while the understanding of debt may be entrenched in the market, debt servicing and behaviors around debt servicing critical to embed, because as people continue to borrow and become more active financially across the board, this is something that is going to become critical to manage going forward for their financial well-being. And finally, just looking at financial advice, we want to understand kind of where do people get their information. Unsurprising, this number, and again, Ghana here is at the top of the list. It's not the place you want to be from across the market. 90% of people saying they don't have a financial advisor. And in fact, 50% of people say they don't even know where to go for financial advice. They're currently using word of mouth. They're going to watching television or listening on the radio for advice. But as it stands today, there is a massive financial advice gap in the market and in the way that people actually engage their finances, making sure that people can know better so they can do better. Again, if you think about the premise behind this work. And just finally, what that does is also affect people's, not just their ability to make decisions, but their confidence in the decisions that people make. And so very discerning and very honest, I think Ghanaians have come back and said, actually, only 21% of people are very confident in the decisions that they make when it comes to saving and investing. The rest of the working Ghanaians who we surveyed said they're actually not confident at all because they don't have the kind of advice that they need, because they're not sure if the things they are doing are the right things, whether that's borrowing, saving, using different vehicles. This is something that as we work more in terms of financial education and making sure that people have the right knowledge, this is something that we will start to see turn the corner and really start to trend in the positive direction when we look at people's confidence in decision making. And so just on recapping some of those final thoughts, first and foremost, income security is still the number one priority for people. Things are tough, earnings are down, financial stress is high. That has not changed. The reality has not changed for people. What they have done is turn to their network. That connectedness, family and friends are becoming the cornerstone of how people respond and engage this challenging environment. The financial advice gap is huge and really does need intentional work to start to close those gaps and help people navigate their finances, especially in the context of the realities that people are in this market. A positive savings mindset is prevalent, and saving behavior trends are starting to move in the right direction. So really encouraging to see that. Borrowing, unfortunately, is on the rise, and people are using trusted networks, mobile lenders, banks, etc., to get access to loans. But borrowing definitely is something that we need to make sure we are clear on, and we have support for people to be able to manage their debt as they start to borrow more. And finally, the entrepreneurial spirit and the optimism is still there and is still strong, and consumers and customers continue to invest in their families and their businesses as they try to move forward in their finances. So thank you so much, ladies and gentlemen. You can get the full report. If you scan the QR code, I think it might even be on the tables, but I'll leave this on the screen for now. You are able to access the full report. There's more detail. Today, we were just sharing the highlights. If you are looking for specific information, it is available. And I think we are now going to just jump into hearing directly from consumers, from their mouths. And thank you so much.
I'm 44 years of age, and I'm married, but my husband has passed away last year. We have 4 kids.
I'm a 37-year-old man. I currently work as an administrative coordinator.
We live in a compound house.
So I live with my wife, my 2 children,
We live
and
in a compound house.
my mother-in-law, my wife, my 2 children, and my mother-in-law.
It's my children, my kids, so that I'll be able to be financially sound for them. Since they are schooling, we have so much, a lot to do.
So the priority right now is my family, their sustainability, and how to just grow together.
It's not easy. The economy is very bad, but out of the little business, the little income that comes in, we use it to support ourselves, and that keeps us going. We get everything from the shop here, and then through friends and families, it's able to sustain us.
I think my financial situation has changed a bit, where my expenses are more now.
Depending on the money, I have to divide it. Save some at home, save some for the business, and then save some in my account, my savings account. But most of the time, the house takes more, so each and every day you have bills to pay.
We are moving at a faster pace economically. Our salaries kind of lag behind, so the constraints are real because the prices of everything goes high.
I want my financial state to be improved. Yeah, I wish I could do more. I'm there everything for now, so I wish like doing other businesses or other things so that will fetch more income.
I have a few side hustles. I realized that this motorcycle business was a thing that could fetch some money, some income. So I made a few investments. Yes, I support a few people, but mainly my sister. She lost her husband and she has 3 kids, and things are not so easy.
Apart from my children, I do support my younger sister. Yakuye means togetherness. One person cannot do it all alone. And it brings unity.
I think that's a real thing that we do to help each other in times of needs. Earlier in the year, a friend called me out of the blue. Yo, Kwame, my wife is at the hospital, and I need to pay this bill, but I'm short of money. In fact, I didn't have the money too, so I had to call someone else to loan me money to help my friend out with the bills. So later I would have to find the money to pay back the person. I have very limited people within this circle of trust. My extended family, and then my current nuclear. That's my wife. Those 2 units are like my go-to in times of need.
My auntie, she's in US, so she also always in support of me. The school fees, their husband's sister takes care of that. So they just give without expecting anything in return. I was in debt. I took a loan so that I'll be able to, do business on my own. The people that give money to business people when they are in need, let's say 3,000 every week, they divide it, so you pay like 300. So weekly, they normally come for their money.
In terms of payment, usually because the amount is very little, I'll pay back with the next cycle of my salary.
I just look at my business and just take something small that I would be able to pay.
If I qualify to take a loan from the bank, I would reach out to the bank and see the processes. Other than that, if it's the regular amount I usually take from people, I would take from family.
I would prefer to borrow it in the bank. The reason being that with bank it's more flexible. Yes, and it's monthly, and the percentage too is not that higher.
Where there is debt, there is confusion, there is pressure, there is frustration, there is no joy.
I don't like it at all. It makes me feel bad because it keeps you thinking, if you don't come and sell, or if you don't work, how are you going to get the money to pay them? So it's like all the time something is on you, you feel heavy.
Wow. Ghanaians really excel at this whole concept of management. How we're able to manage the stress and everything is amazing. Shortly, we're going to have an in-depth conversation bordering on the sub-themes that have come through. We're going to talk about confidence and rebound in the economy. And we're going to talk about side hustles. We're going to talk about the banking of family and friends, Biakuye, that concept which is very strong in Ghana. We're going to talk about the sandwich generation, savings behavior, resource to entrepreneurship, retirement, financial advice, and financial literacy translating into financial confidence. I just want to take two opinions. What have you heard and hope to hear in the panel discussion?
For me, I think what stood out was the fact that Ghanaians have a sense of responsibility towards one another. So I want to hear how that can be translated into creating wealth for everyone.
Let me come this way. Hello, Mom.
I wasn't expecting that. We were talking about, my new thing is hearing about the sandwich generation, the term, because I think it's reality, but just hearing that it's something that's prevalent, that's my thing.
The last edition, we got a new term, polyjobbing, and we're hearing sandwich. Let me take the last two. Hello, sir.
Thank you very much. The findings were very insightful. We noticed that borrowing is on the rise. It would be very, it'd be helpful to know, is this due to job loss? Over the period, have people lost their jobs and then, they have no steady source of income and then are now having to borrow to make ends meet? I think I'd like to understand that a bit better.
And then let me take the last one from here, Madam.
Okay, so for our 21% confidence in savings, I want to know more about it. Yeah.
Okay, so for the answers to these and more, please welcome my panelists as they join me on stage. Mr. Roy Punungwe, Madam Vukuyazi Madube, Mr. Bernard Avle, Mr. Patrick Ba Abankwa. Please make them welcome with a round of applause. For the next 30 minutes, ladies and gentlemen, we stand accused. We want to delve straight into the sub-themes that have come through. And I want to really premise this conversation on 3 building blocks. Let's talk of the now. Let's talk of the future. But most importantly, let's talk about prospects, great opportunities that lie ahead. But we're going to start with the newest member of our family. Ladies and gentlemen, he's taking over from my brother, Tawana Biza. Make welcome warmly our Group CEO, Old Mutual Ghana, Mr. Roy Punungwe. How does it feel joining us?
No, it's good. It's a good experience.
Really?
I'm very happy to be here.
Make sure you don't become a Ghanaian. So let me start with you, Roy. From what we've heard so far, I would like to get your fresh perspective. Why is this research of importance to your business and the financial services industry? And for all Ghanaians, tell me, what's in it for them?
No, thank you, Mr. MC, and good morning to you all. I think for us, very important for our businesses, Old Mutual Ghana, but I think more importantly, very important for the industry and the market. For me, I think the way I look at this study, it's more like a dipstick test to see how well we're doing as financial services providers in addressing the needs of our market. And it's a bit of an indictment. I think there's some work that we need to do, areas of improvement. I think coming closer in terms of Old Mutual Ghana, I think for us, we are a customer-led business. So it's very important for us to have a deep understanding of the consumer, of our potential customer base. because I think with that understanding we can draw some very important insights and becomes very valuable for us because we look at it from both sectors, the formal sector and the informal sector. But I think more importantly, with the context that was set by the professor earlier on, for us here in Ghana, when you look at the country over the last 2 to 3 years, we've gone through some economic challenges. So I think it's more important now, more than ever, for us to have a better understanding of the financial well-being of our target market. I think the understanding is one side of the coin. I think the other side of the coin is the actionable insights that we draw from it. And I think that's the focus for us as Old Mutual Ghana. And I think the place to start is around the product development side of things. Because with a study like this, you actually see where the needs and gaps are of our target market and how we can kind of tailor our offerings in addressing those gaps. I think something that comes out strongly was the sandwich generation, the 4 out of 10 that's in the market. And when you look at what we're offering in the industry, nothing quite speaks to their sandwich generation. So I think it's also an opportunity. And these are the insights we need to bake into our product development space. I think also from a risk management side, it's actually quite interesting because I think a study like this actually helps us in terms of predicting financial behavior. We talk of the borrowing, the lending.
Sure.
And in Ghana, a big part is the Bank of Family and Friends, which doesn't always show up in the other data points. So you always have to bake that in when you are doing your product development and offering the solutions to the market. I think also for me, from an innovative side of it, because as a business, we want to become more data-driven in our decision-making. So this is an additional data point that will then build into analytics to see how do we position ourselves in the market even with our solutions, and how do we package some of those solutions for our customers. I think it's also important when you look at the customer experience side of things, because this gives us more insights in terms of how we better engage our customers. I think the piece that sticks out for me is more customized engagements with specific customer segments, more targeted communications. We talk about the polyjobbers who are different from some of us who have one job, one hustle.
Sure.
You know, they have nuances in terms of maybe how we need to engage them. So some of those things we need to think around them. But I think also at the same time, I think there are definitely opportunities that you get out of the study. So there's a potential in terms of market expansion, inclusion of certain segments that we were not including. I think for us, it definitely gives insights in terms of how we can also position ourselves, especially with that segment that is currently unbanked, where we are not there strongly, but it's where we want to be, because 70% of the market is in that, mostly in the informal sector, and a lot of them become unbanked. So we need to see how we can reach out to that segment, and also being aware of some of the cultural nuances that you see. Sure. The second priority here is that people are concerned in terms of how they assist other people, which is not always evident in the other markets that we operate. So those are some of the key takeouts. I think in a nutshell, for me, it definitely allows us all in all to become build a better competitive advantage for Old Mutual Ghana. But more importantly, I think it puts us in a uniquely or better position to be able to help more effectively Ghanaians achieve their financial security, their growth, and their long-term prosperity.
Cool.
Thank you.
Lovely. You've spoken about product development. You've talked about customized, solutions and communications, ways of reaching even the underserved. Let me come to you, my sister. Let me get the name again. Vukuyazi. Vuyokazi. That's what happens when your moderator hasn't had breakfast. Forgive me. Let's talk about the issue of debt. It's really fascinating. So, from my understanding of your presentation, there is less emphasis on retirement planning. There's more concentration on an increased appetite for debt, which leaves us in a very precarious situation in the sense that polyjobbers, as we've come to know, side hustles and all that, that's what people are focusing on.
The importance of community and supporting community in that. So if you have a pot that is limited, because it is a pot that is limited, because it is limited on a month-to-month basis, part of that pot is going out to support people versus actually servicing debt, for example, or saving further, etc. So I think that is probably the biggest nuance, is when you start to look at debt, it's in the context of a nature and an interconnectedness amongst people and community. Now, I think where things become slightly concerning is when we look at debt as a means to an end and survival almost, which is what you're starting to see. So the number was 38% of people receiving money from family and friends to sustain them on a month-to-month basis. And what you want to see slowly is that number dropping, not because, you know, family and friends have closed their pockets, but because there's less reliance on that. And so I think that probably is the focus area, more so than using debt and using borrowing to actually supplement income. It's seeing businesses grow. It's seeing people earning, you know, more versus whether that's through polyjobbing or multiple opportunities. But it's starting to see that lower reliance on family and friends and debt to make ends meet, because that does become a cycle and does tend to actually become quite problematic when you look at long-term financial well-being.
Let me just add a little bit. So looking at a peculiar situation where we really tend to rely on this organic solidarity of Biakwe, interdependence on each other, how is Old Mutual positioned to take advantage of this unique arrangement and proffer some very sustainable financial solution?
I think that's a question for Roy, but I'll take it. I do think, no, I think the probably where the difference is when you look at Old Mutual is our commitment to understanding customer needs and consumer needs is how we then better serve those solutions, whatever they might be. So, you know, we were talking earlier about, are there any savings mechanisms that are, besides your informal mechanisms in the formal sector, are we actually harnessing that community and that sense of Biakwe? Those are some of the conversations we can start to have, but I think it starts with the insights. It starts with the understanding that this is people's reality and not trying to change them or judge them. I was joking with Roy earlier that this is a judgment-free zone. It's very easy to kind of look from the outside in and say, oh, but why are people supporting other people? You know, if they were taking the money and doing something, that's not the purpose here. The purpose is understanding so that we can actually better meet the needs of the people we are trying to create solutions for. So I think as Old Mutual, we're probably at the beginning of that journey of really making sure we understand. This is the second time we've done the survey, obviously from 2023. The economic environment has changed, as Prof showed us earlier, drastically. And so I think our commitment is to taking these learnings and making sure that we're doing something with them and making it actionable. But yeah, at the moment, I don't think there's anything. I don't know, Roy, if you have anything to add, but I don't know of anything in particular from an innovation perspective that has been developed. But I definitely think where we are leading the charge is on commitment to understanding and then making that a reality or actionable within our business.
So a focus on education and also awareness, you know, education in general. Let me come to you, Patrick Abankwa. You joined us last year, and you are an investment analyst. You are also somebody who is in financial literacy. What we know of debt and savings is as a result of developments in our economy consistently. Share with us what's been the evolution of savings and investments across, you know, in Ghana in general over the last few years, and where do you see it going in the short to medium term?
Thank you very much. What I see from my engagement with a number of people when it comes to savings and investment is the fact that people are beginning to put emphasis on savings as we speak, as compared to some few years ago. And then what pushes a number of people will be the fact that people lost their jobs during the COVID times. And people have now seen the essence of beginning to put a focus on savings. So that continuous reminders of putting savings at the forefront of our discussion is something that people are looking at now. Then the issue of debt, as we saw in the survey, people are now also focusing on debt. But if you look at the general sense of it, the debt usually goes into education, it goes into housing, it goes into medical bills. So if people are beginning to put these things in context, that means that whatever decision that they take within the debt space will be geared towards something that is sustainable in the issue of education. Sometimes we don't see education as an investment, but we all know that education is an investment in someone's life. So that's also something that Ghanaians are putting much focus on. Then the issue of retirement planning it's also something that people are beginning to put their minds around it, because whatever you do, eventually get into that space. And sometimes when you talk of retirement, people are thinking of the HCC that we have in Ghana. But you can go on early retirement because of an illness and accident. So people are beginning to also see the need to position themselves when it comes to retirement. So these are the critical things that people are focusing on. And then again, one thing I also find is, and I also saw it in the report, has to do with financial education. People are now beginning to look for information when it comes to investment that they can do, when it comes to savings products, and that leads to the quest for digital products. Now, people don't actually want to go to the institution, their offices, to get solutions to their problems. They want institutions that are offering this digital product by the click of a button. They go on their phones, they get that. So that's also something that is driving, and that's also more of the medium term to the short term basis when it comes to the needs of people. So that's what I see from where I sit.
The report shows us that a lot of people are not digging into their savings. They are rather going for more debt and more assistance. I mean, not necessarily, debt. Tell me, from what you've said so far, children's education is a priority, as well as some informal retirement plan. But are these priorities aligned right? Are they sustainable?
I wouldn't say it is fully sustainable. What I've also found out is that people have gone into the space of lifestyle adjustment and inflation, where we begin to live a certain lifestyle which does not automatically or correlate with our income. So we see certain kind of lifestyle that appeals to us. We tend to follow after that, but it doesn't align with our level of income. So that means that it's either we are going into our savings, if we have, or we now fall on others for support. So we live our life with a gap that, okay, this particular gap will be filled by this uncle or that friend. And that's what we continue to do, and it becomes a cycle. And if that cycle is not broken with some kind of financial education, it will continue till the person gets to a point where if the support cuts, then the person is in serious trouble.
To the extent that I stopped posting some time ago, because whenever I post an event, somebody will call me and say, "Oh, I just saw you just finished this event. I beg, I need 1,000." And before I realize they are living some frivolous. But let's come to Bernard. Bernard, you are our finance minister. We take your word as final. General Manager, City FM and Channel One TV. Your station has been at the forefront of financial literacy with your Effective Living series and all of that. You've really given us a lot to ponder over and to change our mindset when it comes to our finances. From what we've heard so far, 40% of respondents strongly agree that financial service providers don't understand their needs at all. In designing solutions to address the challenges we see raised by consumers in these findings, what do you think financial service providers need to carefully consider?
Wow, that's like an exam question. Thank you. Look, I'm happy to be here. That's point one. I need to say that the first time I heard of this report was, I think, a year ago, 2 years ago. I heard her on air. I was driving somewhere and I was like, wow, this is so refreshing for a financial institution to be discussing what you really call intelligence on public radio. So I asked my guys to permission to play it back the next week, and we did, and we got a lot of good feedback, which goes to the point that there's actually demand for high quality discourse on consumer behavior, financing, which is really missing. A lot of the economic discussion is very dense. So for example, yesterday the budget was read, and those words, I mean, to be fair, this year's budget was less technical. But thanks to my friend Patrick, a lot of times we hear fiscal rigidities, we hear things that really don't make sense to the ordinary people. So it's refreshing to hear somebody talk to us in a way we understand about something that's important to us. And I think Old Mutual deserves a lot of credit for this. I was actually remarking to her that I was surprised your competitor hasn't copied this, because not only is this useful for generating insight about the consumer side and also coming up with strategy, you're actually growing the market by educating people on their own behavior. So I think it's fantastic. And so that's my preliminary comment. Second point, before I answer your question, again, taking liberties. I noticed that there's a certain tendency towards mobile money. In fact, this report is very rich. So for example, if you look at where people take out loans from, a lot of people prefer their family and friends. Formal financial institutions, it rose from only 8 to 13%. But people taking out a loan from a mobile money, doubled 11 to 22. What does that say? It tells you that the financial services from mobile money is a real treasure trove. 46% of people are saving with mobile money. That's incredible. So they're probably saving more with their mobile money than they are saving with their bank. What does that say? A lot of times when we discuss savings and all these things, look at it from the supply side. Government is crowding out investors. But maybe the way people interact with their mobile money service provider is different. Maybe because they have lower costs, they are able to offer sort of cheaper loans. Because a lot of our banks, because of their cost structure, the loans are very expensive. So maybe for even Old Mutual and the rest of us, the mobile side, using technology to cut down costs, can make it easier for you to lend cheaper. So all the value is translated to us, the end user. So I think this report is saying a lot to the industry, even about how we relate with the consumer. All right. So I don't think we should gloss over it. I actually think beyond this panel, there should be a lot more digestion of what this means for the way we relate with clients, because I think there are lots of interesting insights there. Now to your question about, obviously, most people don't want to go to their bank anymore. And I obviously trust my friend more than my bank. And I think what we've seen is that a lot of these banks come with supply side products. We have this interest. There are a couple of problems with their offerings. I don't think they are transparent enough in the way they even communicate. So they'll come and say to you, come for a loan, you live happily ever after. They don't even tell you how you're going to pay. They don't tell you what method of payment they will use. All right. So for example, I was interviewing a bank a few days ago and they were saying, if you come for a loan and you're paying back, we use the reducing, they call it reduced balance means. Yeah. A lot of people don't even go into those details, right? They don't tell you how come I'm charging you 22% per year and how that cost buildup comes. So I feel like from the demand side, people want more transparency. Be upfront like you are, because I want to take money or give money to the person I trust. So I think what you're doing is you're demystifying finance, and so more people would want to either save with you or do their pensions with you because you've demystified it. Number two, if you can make it more affordable, remove all those hidden charges, unnecessary things in the fine print, and basically charge me just for the interest, I would be happier to come to you. Number three, the low savings mobilization is also because, and this is a general criticism of the financial sector, financial institutions exist to do intermediation. Basically, they take money from people who have excess of it, like Roy, and give it to people like me who don't have any. So they offer Roy a savings interest rate, and then I pay something, so Roy gets his money protected. The savings interest rate is very low. Meanwhile, the interest rate you charge me is very high. So the spread is extremely high. So your objective of financial intermediation doesn't happen. Number two, a lot of the bank's financials, banks in Ghana don't lend to people. They basically buy government money. We've looked at most of the financials of the banks. Their interest income is from government securities. They are not giving money to people, which is why you found that less than 9% are going to banks for money for their business. So I think this report is humbling in the sense of confirming that a lot of our financial institutions are not really doing financial intermediation and they are not consumer-centric. This office has a big opportunity to have a new conversation about how we engage in a more transparent way, how we are more open, and I hope more financial institutions will follow your lead to say, look, let's be transparent, let's be honest, let's sit on a panel and put a pesky journalist on to question us. What that does is that when you come back on air next week to come and do a commercial interview, people believe you, because you're being more transparent and you are actually understanding my need. You're making an effort. So I think there's a big opportunity for more financial education in a transparent fashion, and I can only see this getting better. So that's my long answer to your very short question.
Let me just follow up by asking, apart from being transparent, apart from them, getting a pesky journalist as yourself, what other innovative ways can financial service providers scale up financial education without necessarily going through this route?
Again, what we're doing now is an example, right? Look, we have about 3 or 4 TV stations here. Again, they're using the data, right? Word of mouth, 57%, TV, 56%. This is live on television. All right? This will be played back on radio on Friday morning. So use the media. The media does not exist to only amplify propaganda. That's been what we are here for. And you know, she said something that a lot of you didn't get. She said, a lot of people are aware about their savings behavior, but they have not changed their action. Because there's a very big gap between what you are aware of and what you do. And media helps bridge that gap. Because you can be aware that when you're fasting, don't pass by a bakery. Because you will change your resolution, because the smell of bread will make you change. But that's awareness. But from awareness to understanding, to credibility, to action is a very big gap. So what credible media like Channel One, City, and the others do is to help bridge that gap by saying, I was there, I've also done this, I have a story. So people know they have to save more. But the impetus to save is not just because the financial institutions are not giving us a good impetus, but there's need for credible channels to communicate the imperative. Because, for example, in difficult times, you tend to take better decisions than in good times.
Okay.
So 2022, 23, when we had the massive economic crisis, people really think about, do I really want to spend money on this or that? Meanwhile, a lot of companies within that period say they are cutting back. I felt like after the COVID crisis was the best time to come and do financial education. To say, after the collapse after inflation in the global world and all the things happening to our currency, where do I invest my money now? Missed opportunity. If she had come on here to say, now it's time to invest in this, that, or the other, because people are now worried about what the government has done to their money, they would listen more. But they wait for things to go, everybody's happy. People want to buy a new house, marry an extra wife. That's when you want to come and advertise. That's not when I'm going to do it. You get me? So I think we've missed the trick. And I'm saying this for the marketing managers of these companies, that a lot of times when companies want to cut back, the first person whose budget gets cut is her budget. But no, that's when you need to engage more. Because now people are listening. When things are going on, nobody's going to listen. But now that people are broke, government hasn't paid them, giving them a good haircut. Exactly. If she comes on to say, well, there's a better way of doing it, I'm going to listen. So I want you to see communication spending as investment and not expenses. Right? You are growing the clientele base. And by the way, she didn't ask me to say this.
We'll solve that when we get to the office.
So what I'm saying to you is that this work that has been done is part of marketing communications. And I commend you for doing it. But take it to the next level, because to lead in any industry, you have to bear the cost of educating the industry. And when people get convinced, you get the first right of refusal. So it's not an expense, not a waste of money. It's actually market development. And we need more of this so people can take better decisions. 90% of Ghanaians don't have a financial advisor. That's terrible, right? But you are positioning yourself for people to say, by the way, can I call somebody at Old Mutual? Maybe have this money, I need to do something. That's how you grow the market. So I want to encourage you to do more of this. Thank you.
Thank you very much. Sure.
Thank you so much. And I don't know whether you have a deal with Rita. I'm not involved in that. But I do just want to say, to your point, I think what we've done this year is also just make sure that some of these results land in the hands of our consumers and customers. And so on social media, you'll be seeing it throughout the year, actually. We have bite-sized insights that people are able to say, okay, actually, if you are in the sandwich generation, what does that mean? What is the tool that Old Mutual already provides? How do you calculate how much you need for retirement? That is all available for our customers and consumers to access. It's on social media, it's on our website, it's on all different platforms. And I do think that to your point, that financial education in a digestible, consumer-friendly way, because again, you can't send a 30-slide report to a consumer and be like, hey, here you go, know better, do better. It really is us making sure that the information and the knowledge that people need is in their hands and they're empowered with a way of actually acting. So whether that is a tool or a calculator or pointing them in the right direction for financial advice, talking about debt, all of those conversations are actually happening and they have started as a result of this work. So I just wanted to share that is actually happening, and you can keep us honest and keep us to task on that, but it definitely is something that it's not just a one-sided conversation. We definitely want to engage our customers and consumers, and we are doing so with these results.
Insightful and revealing. As we tie the bow on this wonderful conversation, let me come back to you, Patrick. You as an individual, you are an investment advisor, you've done so much to give visibility to this area. Tell me, you sit on, you wear two hats today. You come from the Chartered Institute of Bankers, at the same time, too, in your own personal capacity. What should institutions like banks and professionals like yourselves do to give visibility to financial literacy and education?
I think that this is a call that I welcome, because I used to work in the banking industry, and you realize that most of the things we do in the banking industry are geared towards offering and selling our products. So a customer comes in, they need a loan. Your mindset is that, okay, how much do you need? Let me just put the paper together, get approval, we go. We don't take time to walk the customer through what they should do beyond the loan, so that tomorrow they don't come back for the same loan to solve the same problem. So as professionals and as institutions, we need to take it upon ourselves to create advisory service which is constant at each of the branches. So a customer comes in, and perhaps the customer does not need maybe a loan. All the customer needs is someone to advise him or her on what to do. But we don't do that. So for me, it's the first thing that institutions should do. Every institution, whether you are an insurance company, whether a pension space, a banking industry, there should be a constant and deliberate advisory service that people or customers can easily tap into without any cost once they are customers of the institution. That's one. Two, there should be deliberate webinars to engage clients on issues that are happening within the industry. Because most of the decisions that customers take, most of them are born out of ignorance, in quote. Most of them don't even know the impact of the decisions that they are taking. But if we invite them, we hold forum, webinars for them to come and learn, that's also something which is going to help. Then, of course, people should be empowered to do financial literacy on their own, their various communities, their various churches. This should be something that should be done on a deliberate basis. Of course, we know the church or the religious body is for religious activities. But when people's welfare, like their financial needs, are not met, it affects the church. So that should also be empowered when it comes across. Then, for what I also think people should also do is that beyond all of these things, people should also take responsibility for their financial decisions. And that comes with awareness, as Bernard said. People should be made aware of the fact that if I take a decision, if I go for a loan, if I go for this particular money for this program, and the program does not bring me immediate returns, I'm going to create a hole. And that hole cannot be solved until I begin to increase my income, as we saw in the polyjobbers. So that is what I think should be the approach in solving this thing. So institutions will have their part to play, which they have to do more. As individuals, we should also be conscious of the impact of our financial decisions on our future. And if we don't do that, that's where the challenges will continue to prevail.
Wow. 23 minutes of a very refreshing conversation. We've delved into the Old Mutual Financial Services Monitor. It is an opportunity for us to have a bird's eye view of financial behaviors, attitudes, and challenges which has been faced by Ghanaian consumers under the 2024 economic climate. But most of all, it's been an avenue for us to assure you, our broad stakeholders, of our commitment to driving positive financial behaviors, thereby helping Ghanaian consumers achieve their lifetime financial goals. Roy, in 2023, what we did sent ripples. What we're doing today is sending waves. But tell me, what is the future of this report and your outlook on 2025 as Old Mutual Ghana?
I think for us, our outlook is quite positive on 2025. I think also, the budget statement came out yesterday, and there are some positive market indicators. But I think in terms of this report, I think I come back to what our Minister of Finance said, Bernard. I think we need to drive the education piece. The market development piece, I think, is what we need to drive strongly. And I think we need to leverage the technology side. We are definitely planning to increase our financial education on social media, for example, in addition to already what we're doing on radio. But I think we need to also bring partners to the conversation. I think more importantly, the way I look at some of the challenges that we have, it's not an Old Mutual only problem. We have some systematic issues. So we really need to take an industry approach to it. So it really takes the collective at the end of the day. We need a more collaborative approach amongst the financial services providers. And we also need to be a bit more innovative in terms of how we take that message. I think once we do that, once we are strong on the market development, I think everyone in the end wins, because the financial inclusion side actually drives up, and that will feed into the economic growth and over the long term, socio-economic stability for the nation. So I think that is something that we need to keep the big picture, eye on the big picture at the end of the day.
I'm the big
Yeah.
picture. Okay, Patrick, together with Bernard, and then my sister, let's wrap it up. 3 action points from this survey or from this report. What will they be?
Okay, so for me, it's about the financial education, awareness. We should drive and drum some of the things that we've seen. There are confirmations of the things that perhaps we know already. So we should drive what people should do in terms of actions around if you are borrowing within your circles, what should you do? Then I also think that for Old Mutual, it's about the digital products that should solve the problems of people. Once you drive that out, I'm sure some of the issues may not repeat or even reduce in the subsequent report that we'll be doing next year.
Okay. Finance Minister.
Yes, Jerry. So I think they should keep doing more of this, right? Because it's very clear that to lead in any market, you have to spend some money to develop the market. And there's a big opportunity. The 90% of people who don't have a financial advisor is a big opportunity because eventually they would need one. And I think this is a good start. So Old Mutual should continue basically pushing, all right? And number 2, find, as she said, new ways of using old content. All right, so this is a big, good conference. I like the fact that you have different snippets on different platforms. I think you could even start talking to university students about financial planning and stuff like this. So if you sponsor a university program, let them start thinking about their future because you don't want them to be part of the sandwich generation. And you'll be surprised that as you grow that group, when they become financially comfortable, you will be the person they would come to. All right. And number 3, continue the partnerships. I like the word. So it's not media as just the tool to advance your welfare. And we too don't see you just as another client who's giving us money, which is why we've left everything almost over. I'm here, a lot of guys are here. All right. So I feel the partnership point, because where we're getting to in this cluttered world is we cannot do business as usual. If you want to give value to Old Mutual, you have to give them your best. You have to be flexible. Bend over backwards to create solutions. You cannot just sell airtime. You have to think deeply about who your customer or client is trying to reach and how you can partner them to reach that so that when they grow with you. So I think those are very strong words, and I'll leave the rest. So, but thank you so much for the opportunity.
Lovely. Uyukazi?
Thank you so much. I think the one has been said, financial education. The second one for me is a long-term perspective. This is the long game. Any kind of financial well-being, creating wealth. Someone spoke earlier about how do we harness community to create wealth. It is the long game, and I think although people are living today in their realities, we need the financial services industry to be playing the long game, looking very far ahead in terms of in 10 years, in 20 years, what are some of the things that we want to see and start actually activating towards that. And then I think the third thing is supporting the entrepreneur. We haven't spoken a lot about entrepreneurship today. We did cover it, but I think it is still a mainstay. So those polyjobbers, people with side hustles, people with businesses, 50%. So that in this room, half of the people in this room have a business. You know, we were talking about just how embedded that is. And I think there's really an opportunity to start making sure that through their businesses, through their entrepreneurship journeys, we are not just educating people, but empowering them to improve their finances holistically.
Roy, you have the last word.
No, thank you. I think for me, I'm quite happy to hear the different voices from the different corners in the country. And I think it's a collective at the end of the day. We also need to just be clear of the long-term benefits that will come from doing this as a society, as a country. But they always say you eat an elephant one step at a time. So these are the steps that we need to take. But what I would be positive to look at is 5 years from now. When you look at the report 5 years from now, has it shifted for the positive? And I think that's what we need to be looking at. But thank you.
Thank you very much. For me, these results underscore the importance of financial advice in navigating our finances both for today and tomorrow. Seeing the positive shifts in savings behavior gives us the assurance that Old Mutual's commitment to driving positive financial behaviors is indeed helping Ghanaian consumers achieve their lifetime goals. I'm further emboldened by the fact that your commitment to meeting your customers' holistic needs through an integrated financial services offering is shaping ongoing insights such as these and many more. And I believe Old Mutual Financial Services Monitor will enable partners across the divide to act intentionally to changing the status quo. But most of all, I hope that these insights will become a catalyst for us all to join forces to solve our shared challenges, whether they be in the economy or more broadly related to the well-being of our people. Now that you know better, help me say thank you to my amazing panelists. Ladies and gentlemen, they've done a yeoman's job. Mr. Roy Punumbwe, Group CEO, Old Mutual Ghana. Madam Vuyokazi Madube, Group Head of Knowledge and Insight. Mr. Bernard Avle, General Manager, City FM, Channel 1 TV. And Patrick Babankwa, an investment analyst. Please, a round of applause for them. How about a group photo? And let's have the logo of the monitor show up. I didn't do my makeup today. Thank you very much. It falls to our very own Madam Jennifer. Before that, however, I'm pleased to inform you that we still have a lot more food at the end. So please, after this event, let's linger, stay on, ask a few more questions, interact, and then we should get to know more about this initiative. Make welcome Madam Jennifer Dedekuma Amon for the vote of thanks. I beg your pardon.
Thank you, Jerry. Good morning once again, everybody. Before I go into the vote of thanks, I'd like to offer my sincere apologies for the technical glitch earlier. Thank you for your patience and for sticking with us. So first off, I want to say thank you from Old Mutual to all of you for making today's event a success. For today's briefing, thank you so much for taking time off your very busy schedules to be here with us for this launch. And then a big thank you goes to our own boss, Roy. Thank you so much for your visionary leadership and commitment to our business. To our esteemed execs from Omar, we are deeply appreciative of your unwavering support to us. You are truly an example of Biakuye in this case. Thank you very much. To our regulators and board of directors, thank you for your continued guidance and strategic leadership and oversight. You ensure that our business operates with integrity and a deep sense of responsibility. To our EXCO members, thank you so much for your support in making this a success. To our partners, media, stakeholders, colleagues, especially the marketing team, your hard work, collaboration, continued support, and partnership have been very pivotal in bringing these insights and the events to life. Thank you so much for making business possible for us. Your commitment is unwavering and unmatched. And finally, to our audience, both here and online, thank you so much for joining us today. As we depart, let's not only reflect and discuss these findings, but actually take action where it matters most. Together, we can make real impact by doing great things every day. Thank you so much.
Thank you very much, Madam Jennifer Dedekuma Amon. To this end, we'd like to thank you all for coming. Let's take one big family photo together. I ask all our speakers to please come forth together with our board members and our group executives. It's incomplete without our representatives from the NIC, the NDRA,